warm welcome. You are tuned into Closing Trades right here on Nifty Now. I'm Sharma and with me is Snehi Shah. And talking about the markets, yes, the weakness continues on the benchmark indices. Nifty down almost 100 odd points, while Nifty Bank as well 300 points of decline is what we are seeing on that index. But the good part is that the breadth of the market is not that concerning, and along with that there are a lot of stocks that are making good moves. Firstly, let's touch upon Titan. That is now the top gainer on the Nifty 50 side. Other than that, the auto pack is seen to be doing very well, and IndusInd Bank, since the word go, that stock has managed to be among the top gainers on the Nifty 50. But on the flip side, it's Adani Ports, Adani Enterprise. They are actually now the top drags on the Nifty 50. After that, Adani Port numbers also kicking in, and along with that, it's the heavyweight Reliance that is also seen to be putting some pressure, down 0.5% as we speak. The IT counters, they are making to make a bit of a U-turn, but along with that, it's the defense pack that is doing very well. And like we have been flagging off, that select PSU counter since the start of the day, they are making surprising moves. Take a look at what is the move in BHEL. That stock higher by 2.4% as we speak right now. And along with that, in the morning, it was some of the other counters like Coal India. They were also doing very well. So all in all, good moves rather on some of the stocks right there. But yes, the weakness continues on the benchmark indices. But Snehi, any other stock you wish to flag off?
Well, absolutely. You know, while a lot of stocks are doing well today, there are select pockets where we are seeing some pressure. Case in point being Triveni Turbine. Weak Q1 is what we've seen from this company. Their net profit has fallen 19.5% on a year-on-year basis, and the stock continues to be under pressure. Slightly more than 8.5% cut is what we're seeing on that stock. Let's pull up Paytm and see if we've seen any recovery on that stock at all, given the kind of block deal we've seen in the morning today. 2.9% equity has changed hands, and Alibaba's group and Fin is deemed to be the likely seller. That stock continues to be under pressure. 2.5% cut is what we're seeing over there. Exide too, on the back of its numbers, margins have expanded. So let's see if Exide is doing anything. Not much. It seems like a good set of numbers optically, but Exide continues to be under pressure because the management did flag off some demand concerns being seen. So almost a 2% cut is what we're seeing. As of now, we also have numbers coming in from Castrol for their Q2 because they follow the calendar year way of accounting. So right now the stock is holding in the green. We'll give the market some time to digest those numbers, and then we'll come back and see what Castrol India is doing. But as of now, we have Sunny Agarwal, Head of Research, Fundamental Desk at SBI Cap Securities joining us, and we have Sharan Nilane, who's a market expert, who's joining us in the studio. Good afternoon to both of you, Sunny and Sharan. Sunny, let's come to you first. What are you making of the market moves that we've seen today? At one point, there was a little bit of a hope of a bit of a recovery, but that has once again not been the case with our market today, and we have been lackluster ever since the get-go. What are you making of the market moves right now?
For having me on the show. I think definitely market has become a kind of a range bound trading. Market has been trading in a particular range since there is an overhang of a US trade deal uncertainty and what will happen going forward. But again, what we believe is that stock specific action is something which is the current flavor of the market. And if you look at a few sectors or companies which are reporting good set of numbers, they are seeing a buying at a lower level. So case in point, a few EMS companies like Amber, Sirma, they have reported good set of number. For that matter, cement companies have reported a good set of number. Hotel companies, new age businesses like Eternal, or for that matter Paytm or car trade. So I think again a stock specific activity is the flavor of a market. And again, we are also recommending same to our client that any dip is an opportunity to accumulate stocks where the growth is likely to be decent over the period of next 3 to 4 quarters.
All right, so those are the select pockets that Sunny is liking at this point in time. But Sharan, just wanted to have your take on the index as well, because from the start itself, we are seeing a bit of a decline, and it's Nifty Bank that is lagging behind. What's your take?
So similar to what I said in the morning, Shishti, 24,600. So Nifty is more or less fighting for its life to hold on to that levels. So nothing has changed. If it breaks below that, again, you'll quickly see that 24,500 level coming in, but it has strong support on that level. So I don't see that levels breaking anytime soon. Again, if at all it comes to that level, it'll be a buy on dips market. It can consolidate. You can make a good portfolio on those levels. I don't think that level will break anytime soon. Bank Nifty, as I mentioned in the morning, again will underperform Nifty, and it is doing so similarly. Bank Nifty has now next support around that 54,900 to 55,000 mark, which is just hardly 250 points away. So if at all it comes to that level, I see a slight bit consolidation on that levels before the next move.
Okay, so that's the take on the technical setup when it comes to the benchmarks. We also have Vinay Rajani, CMT Senior Technical and Derivative Analyst of HDFC Securities, joining us on board. Vinay, hi, good afternoon, and thanks so much for your time today. Give us a sense of some stock-specific action that we're seeing in the market today. Case in point being Triveni Turbine, deep cuts coming over here. Paytm too continues to be under pressure. How are the charts shaping up for both of these names?
Yeah, so first was the Paytm and what was the other one?
Triveni Turbine.
Triveni Turbine. So Paytm has done exceptionally well, and it is just showing some profit booking sign as of now. But overall primary trend of the stock has been quite good. It is just a profit booking in the overall bullish trend. So it might happen that for the next couple of sessions, it may extend the fall and extend the correction. But overall chart looks good. Buy on dip should be the view. Overall, there is a strong support around 9 or 80 odd levels that should be utilized to go long in the counter. So overall for the investor it is hold, but short term we can expect some extension of the correction. The another one was the Triveni Turbine, right?
Yes, Triveni Turbine, yes.
Triveni Turbine. Yeah. Yeah, so Triveni Turbine is down by today 8-9% and completely change of a trend. Now it is below its medium to long term moving averages of 50, 100 and 200. So that looks weak right now, and volumes are quite high. It looks like that it can extend its fall towards the next support zone of 495. So looking weak on the charts, immediate reaction of the news, and after that it can extend the fall towards the next support of 495. So looking weak, immediate trend of the change of the trend we can see on the chart. So definitely one should not catch a falling knife here. Wait for some stability to come. The next support comes in at 495.
All right, so those are the select counters that are showing good moves in today's trading session. But the other news flow with respect to the defense pack that we have seen coming a while back was that the Air Force and the Navy are expected to place mega orders for the BrahMos missiles, and that could be definitely beneficial for select defense counters as well. And today, of course, we have seen good moves rather coming in on these news. But yes, we will talk about all of these in bit detail, but before that, let's get you an ET Now exclusive then. And the biggest M&A deal so far for 2025 is India's drug industry is deadlocked. Medical injectables firm Gland Pharma secured an interest from 3 potential buyers, Blackstone, Brookfield and EQT, to acquire Chinese conglomerate Fosun's majority holding in the company. However, the deal is on hold over differences about valuation, especially following a surge in Gland's share price since the end of April. Anurag Joshi brings in more details on this one. Anurag.
Chinese conglomerate Fosun's plan to sell its majority equity stake in drug maker and injectable company Gland Pharma is deadlocked. Gland Pharma had secured interest from 3 investors, Blackstone, Brookfield and EQT, but their interest in the deal has now waned over valuation issues. The deal's progress has slowed following a surge in Gland Pharma's share price since April, and that's acted as a dampener for the deal to go through. And these differences are over the perception, over the valuation of the company. Now, Gland Pharma shares have by about 39%. This is since end of April. The 3 investors had evaluated the possibility of an acquisition of owner Fosun's majority stake in the company. Fosun had agreed to acquire a 74% equity stake in Gland Pharma for $1.09 billion in 2017. Fosun is controlled by a Chinese billionaire Guo Guochang, and is currently owning a 52% equity stake in Gland Pharma. And a potential deal will cost the successful acquirer at least 16,700 crore rupees. And the successful bidder will also have to make an open offer for an additional 26% of the total shareholding of Gland Pharma if a deal goes through.
Okay, Anurag, thanks for all of those details. So that's the exclusive coming in on Gland Pharma that my colleague Anurag has just broken. And let's just take a look at what the stock is doing right now. A 1.26% is what we're seeing on the stock as we speak. So, well, that's the exclusive story coming in on Gland Pharma. But let's shift focus and talk about some stocks, other stocks that are in focus. And one of the stocks that's doing very well today in trade is MTAR Tech. Just pull up the stock and let's see what that stock is up to right now, because we've seen a move of 10% in today's trading session. Sharan, what are the charts of MTAR Tech looking like? And such a spike, a 10% spike, does it make the chart still look attractive?
So, Snehi, as I mentioned in the morning, like the whole defense pack, there is suddenly a change in direction. They are consolidating, they are moving on the upside, even Mazgaon, GRSE. But this move is something extraordinary. I think today was the results, maybe the results are out or something. But again, on the charts, it is showing some signs of reversal, seen some kind of rejection of the 200-day EMA, which comes around 1600. If it starts to trade above 1600, it can easily retest its previous swing high levels of around 1800. So we'll have to wait and watch how the impact of the results come in. But on the charts, I think I sense a reversal in trend for at least a short-term reversal trend towards the upside.
So good moves rather coming in on MTAR Tech. Yes, we have been talking about the news flow regarding the defense pack, and yes, MTAR Tech is one of the strong candidates. But what I see as well, Vinay, is one of the other stocks, that is HAL. That stock is also in the green right now, given the fact that the markets are still weak at this point in time. Anything specific for HAL you wish to flag off? Is the stock looking interesting, or will you avoid at this point in time?
Yes, so stock has bounced back from the long-term support of 200 days exponential average, and there was a hammer candle pattern also at that moving average support. And to be precise, on 29th July, it showed some reversal, and after that, it did not break that level, the low of that day. So 4400 has been the recent swing low, and that should be as a stop loss, and we can expect some bounce back today as defense stocks are showing some pullback rally. So it might happen that they can extend for last 3-4 sessions when markets were under pressure, but this particular space has not been showing that much weakness. So yes, there is a resistance coming forward at 4600, which is its 50 days average. So I would take, if I were to take a bet, long bet, I would wait for this level to cross on the upside for the further confirmation. So 4605 is a 50 days EMA. Once that is taken out, then it will be a classical reversal pattern where higher top, higher bottom will be confirmed, and 50 days EMA will also be surpassed. So I'm waiting for that level to surpass. 4605 is a level above which one can go long fresh, and the positional stop loss should be kept at 4400.
Okay, those are levels to watch out for on HAL. But Sunny, coming to you, let's just focus and talk about the entire fertilizer space. This space, this pocket of stocks is also a buzz today. Case in point being Chambal Fertilizers, we're seeing almost a 7% uptick over here. Fact is up 3.5%. Coromandel International, RCF, all of these stocks are doing well. Help us understand what is leading to this positivity in fertilizer stocks, and how are you viewing this sector right now?
Yeah, definitely. I think one common message which we are getting from all these fertilizer companies that the channel inventory, which was an issue a year back, that is now no more existing, and now the system inventory is back in line with longer term trend, and that is leading to an healthy primary as well as secondary sales, aided by a normal monsoon, well spread out monsoon. That is again one of the factor which is driving this sales of a fertilizer company. And at the same time, there has been some change in regulatory regulation by the government, wherein the import of certain fertilizers were banned, which has led to an additional push towards the domestic fertilizer demand. So I think many factors, all the three factors led to a better visibility in terms of earning growth for the entire fertilizer sector. And hence, we are seeing this strong interest from the market. Coming to our topic within the fertilizer sector, obviously a market leader, Coromandel, continue to remain our topic. Although the stock has run up significantly, maybe buy on dip is the right strategy as far as Coromandel is concerned. Rallies after a long time reported a very solid set of numbers. So buy on dip is again advised on advisable is advised on rallies. Dhanuka Agritech, although reported a slightly muted set of numbers, but we feel that long-term growth potential still remain intact. So Dhanuka Agritech is the one more stock which we are recommending to our clients.
All right, so those are the top picks when it comes to select counters within the chemical and the fertilizer pack. But with this, Sunny, we'd like to thank you for taking the time out and speaking with us this afternoon. Thank you so much. But with this, let's also get you some of the trading ideas from both of our experts. And winner, you go first. Tell us which is the stock you're eyeing this afternoon.
Yeah, so today SBI Life has moved nicely and hovering around 52-week high and has been resilient in recent past. So overall, it is looking very strong on the charts. Price, volume, and indicator oscillators all are supporting the bullishness in the counter. So considering chart pattern, I would go long in SBI Life with a stop at around 1858. Stop loss can be kept at 1840. This is a trading call with a stop loss of 1.5%. On the upside, we can expect a target of 1900. Second pick I would take on the short side. So pharma space today has been showing some weakness after a long time. The Sun Pharma is looking weak now. It is below the key moving averages supports, and it looks like that it should resume its downtrend. So Sun Pharma August future can be shorted around 1630. I would recommend a stop loss at 1660. On the downside, we can expect a target of 1590 in couple of sessions.
Okay, so Sun Pharma looking good on the charts right now. Sharan, what about you? Some BTST or STBT ideas for the day?
So I have two today, one selling and one buying side. Oil and gas sector is looking very weak. Your MGL, IGL are just breaking down right, left and center. Even a lot of sanctions on Indian oil companies, apart from the listed, even the private ones. So I see this downside continuing. So you can short GAIL August futures around 172, looking very weak on the charts, has already given a breakdown. So your stop loss should be around 176 with a target of 168. Second, Pidilite is looking very good, seen a good reversal, now trading above all its moving averages. So the current price of the stock is around 2990. I think a 50 rupees stop loss should be enough for a BTST. Around 2940. Your target should be again similar with 50 rupees upside, around 3050 to 3100. It's looking good on the charts. I think this momentum will continue tomorrow also.
All right, so one buy and one sell call coming in from Sharan. Let's watch out for that. But time now to slip into a very short break. But before we do that, healthy first quarter show for Adani Ports. The management says this was driven by their logistics and marine business. Let's listen in to the whole-time director and CEO, Ashwani Gupta.
Ports business played a crucial role with 11% growth in overall cargo volume. The domestic ports handled 6% higher cargo and increased market share to 27.8% compared to 27.2% in Q1 FY25. Our international ports also contributed significantly with 22% revenue growth and an improvement in EBITDA margin to 21% from 13% last year. Logistics doubled its revenue to rupees 1,169 crore, driven by accelerated customer onboarding and volume ramp-up in trucking and recently launched international freight network services. Marine business saw a strong 2.9 times increase in revenue to rupees 541 crore, propelled by our diverse fleet of 118 vessels. Our focus on expanding port capacity continues to be unwavering. We commenced operations at Colombo Port and a new export berth at Dhamra. We keep our financial discipline with net debt to EBITDA ratio of 1.8x. In addition, as part of our long-term capital management plan, we successfully increased the average debt maturity from 4.3 years to 5.2 years and reduced the yield across all bond issuances by up to 116 points. Technology, talent, and sustainability are the backbone of our business. We have integrated advanced technology across our operations, including the fully automated port in Vizhinjam and Colombo. The AI-driven strategic command center and digitized trucking management solution is enabling our business to perform better and better. Our commitment to nurturing talent is evident with the commencement of skill building centers at Mundra and Krishnapatnam, aimed at recruiting the youth and equipping them with industry relevant skills tailored to our requirements. Our sustainability initiatives are reflected in our best in class ESG ratings. We have implemented multiple green initiatives, including deployment of electric powered mobile harbor cranes and zero base to landfill in 12 ports.
Hi there, welcome back to Closing Trades. Markets, we've seen a little bit of a recovery from the day's low, 24,660. So now we're once again above the 24,650 mark. And let's see in the last 20 minutes or so of trade if we are able to hold on to that mark. But well, yes, sharp spike coming in. Some of the earnings that have trickled in the last 15-20 minutes have been quite okay. And on the back of that, partly for that reason, we're seeing a good uptick coming in the market. Just as returns of and cut is what we're seeing right now. We have Anand Tandon, who's an independent analyst, joining us on the show. Anand, hi, good afternoon. Before we come to you, let's just take a look at what's happening otherwise, because days after the Karnataka ITES Employees Union filed a complaint with the Labour Department against the proposed layoffs at TCS, the state's IT Minister Priyank Kharge denied any proposed action against the IT giant. Speaking exclusively to ED Now's Jude Sanit, Kharge said that the Karnataka government does not recognize IT unions and is only speaking to companies to understand their reskilling requirements. Here's a slice of that exclusive conversation.
Policy does not recognize any union in the sunrise sectors of IT and biotechnology. Having said that, they have apparently a registered union and they are free to approach government. Not only them, anybody is free to approach the government to address any grievances within the industry. But also the government is wary of the fact that this is in the private sector, and we will be able to help anybody when we understand what the problem is properly. So we have also reached out to companies asking them the problem, and their statement has been very clear that they overestimated their quarterly businesses, and their bench strength was huge. So they had to let go, and also there was a part of it was affected by AI is what they have said officially.
But just the fact the Labour Department has agreed to speak to TCS, I'm naming one company, many others are also affecting layoffs, and question them about the decision itself. Does that disincentivize plans to go about attracting more investment in the IT space for you?
See, the point is that layoffs have happened whenever there has been disruptions. It's just not now. It's happening past 30, 40 years, whenever new skill sets are needed or whatever. The point here is that while we talk to the companies, that does not mean we are arm twisting them, right? We have also reached out to companies and doing a survey asking them how disruptive is AI on the workforce. So once in a month or so, we will be getting feedback from the industry, and then we will work towards setting things right on massive reskilling or upskilling programs if need be with their collaboration. Just by a government cannot even talk to an industry means how will we know what the problem is? So I think there is a lot of unfounded reports that are or unverified reports that are being passed on as government action, which is not true.
All right, but with this, let's move on and let's get back to the markets then. And we have Anand Tandon with us, who's an independent analyst. Hi, Mr. Tandon, afternoon, and great to be speaking with you as always. And Mr. Tandon, the markets are a bit nervous with respect to that overhang and the commentary coming in from Donald Trump, but not much of a fall is what we are seeing on the benchmark indices. What will be your suggestion to make changes in your portfolio at this point in time? And what are the key things that investors should be mindful of at this point?
I think the market is basically taking a view that either there will be no major impact and there will be some rollback in terms of the tariffs that have been announced, or maybe the tariffs will be for a short period of time. Clearly, if they were to sustain at the current levels or the threatened higher levels, the impact can be much more and can cause a little bit more of a disruption in terms of the market trend. That said, the reality there is that the market is also not being sustained by the earnings, because clearly the earnings are also showing signs of coming down. And if you look at both the quality of earnings and where they have been coming from, much of it is poor quality. For example, the banks have done better because of the treasury income, and some of the upside that we have seen has been from metals and mining and so on, which are all cyclicals and therefore a lot more difficult to predict. The consumer side has had its own set of challenges and hasn't done very well. Overall, if you see in the current month or so, the earnings have, the beginning of the year, we had an earnings expectation of about 14%. That has now come down to single digits already. So, in a situation where you're looking at a declining rate of earnings growth, you have to assume that the market, which is trading at closer to 23 times, is not something that can have legs to go up too far on the upside. So, notwithstanding anything that the US does, we still have a challenge in terms of a highly valued market. In this context, obviously, there aren't too many sectors which are easy to spot. And therefore, if you notice, the only sectors that are doing well is the top line growth is coming through consistently, irrespective of what the valuations or margins are. So at this stage, that's the best play to be, that stay with the market, stay with wherever the indices go, and look for companies which are able to show growth, perhaps ignoring the valuations for a while.
Okay, so that's the take on how the market approach should be like right now and how to navigate through all the turbulence that we're seeing in the market. But Vinay, what's your take on some of these capital market themes? Case in point being BSE, that's lower by about 4% today. We have the monthly business update that's coming from Angel One, where it looks like it's weak for another quarter in another month, in a row, wherein their gross client acquisition is down almost 44% year on year, and average daily orders are also down by 31% on a year on year basis. So Angel One also under slight bit of pressure. What's your take on both of these stocks on the charts, Vinay, Angel One and BSE?
Yeah, so this entire theme of capital market has exceptionally given good return in the year of 2024, but now in this year they have been under pressure, and the current structure, technical structure of both the counter has been negative. Especially the BSE lower tops, lower bottoms are there, and it is on the verge of breaking long-term moving average support also. So currently the stock is looking weak only. I'm talking about BSE, and the positional support, the long-term support is placed around 2070, which is the immediate swing low, which I can see on the chart. So as of now, one should stay away from the counter because it is going weak and closing weak today. So that is looking weak. And the another one was the Angel One. So Angel One, yes, that is also forming a lower top, lower bottom formation. The recent swing low of 2560 is there. So any level below 2560 will be a fresh breakdown in the counter. So not only these two stocks, but entire capital market theme has been struggling and has been facing selling pressure at higher levels. So it would be better to wait for some consolidation to happen and some more trigger to come or some important resistance to be taken out. Then only we will take a bullish view. Otherwise, in this entire theme, one should wait for some stability to come, and then only bullish stance or accumulation stance can be taken. So wait and watch should be the approach.
So that's the take coming in on Angel One. But with this, Vinay, we let you go. Thank you so much for taking the time out and speaking with us. But moving on then, viewers, and all eyes will be on RBI's MPC meet this week, and 77% of the economists still expect a rate pause, down from 97% earlier. But the odds of a cut are rising with inflation at 77-month low and US tariff risk also looming. Let's go across to Ashesha, who is here to tell us what exactly is the street penciling in. Ashesha.
Well, yes, first up, let's take you through what the broad expectation is from the MPC outcome this time. And 77% of polled estimates do not expect a rate cut this time, but the odds of cut have risen after the 25% tariff on Indian goods that was announced by US last week. So odds of rate cut have clearly risen over the last few days. Now earlier, 97% of the polled economists expected status quo, that is no rate cut, but that has fallen now to 77% after the tariff announcement that came last week. Let's also take you through where the rates stand currently. So repo rate currently stands at 5.5%, SDF rate at 5.25%, we have SLR and CRR at 18% and 4% respectively. So this is where the rates stand currently, and all eyes will be on outcome from the MPC meet tomorrow. And to put things into perspective, we have IIP, which currently stands at 10-month low, CPI at 2.1%, which is at 77-month low, and demand concerns continue to loom large for the entire economy, and that will be one of the factors to consider when we consider the MPC meet outcome tomorrow. Now, India's GDP growth stood at 7.4% in the fourth quarter of FY25 and at 6.5% for the full year FY25, which remember was at a 4-year low. Let's also talk about estimates for GDP for FY26. RBI is penciling in 6.5% forecast for GDP for India for FY26, IMF at 6.2%, World Bank and S&P Global at 6.3 to 6.5% respectively. So the broad range for FY26 GDP estimates is anywhere between 6.2 to 6.5%. Meanwhile, as far as CPI estimates are concerned, in April, RBI expected FY26 CPI inflation to stand at about 4%, which was then lowered to 3.7% in the month of June. That is the last MPC meeting. And as far as GDP estimates are concerned, remember in June, RBI's GDP estimates that fourth quarter could stand at about 6.3%, and for the full year FY26 GDP could come in at about 6.5%. So that's the large backdrop of the economic landscape, but for now looks like we will not see any rate cut this time.
All right, all eyes are going to be on the policy outcome tomorrow, but also something that's going to be in focus tomorrow is going to be a whole host of stocks in focus on the back of its quarter one earnings. And let's first talk about Trent, because that's one of the 3 Nifty 50 stocks that will be coming out with its numbers tomorrow, the other 2 being Hero Moto and Bajaj Auto. Now for Trent, we're expecting a weak set of numbers coming in for quarter one. Because remember, when the company came out with its quarter one update about a month ago, the stock was down 12% that day on the back of a very weak set of updates coming in. So in line with the company's estimate and their update, revenue is expected at 5,061 crores, which is up almost 20%. Remember, Trent is used to seeing historical moves in revenue of anywhere between 40 and 60% on a year basis. So as the base keeps increasing, this number seems to be the rate of growth seems to be falling short, and that's why 20% number right now looks weak. EBITDA is expected to be up 19.5%. We're seeing decent growth in net profit of 14%. Margins, however, could be on pressure on the back of a higher Zudio mix coming in. Now, the other key thing to note is that if we're penciling in a 20% growth in revenue and that year-on-year store addition has been roughly 30% due to this mismatch, the same store sales growth could be slightly under pressure. So the management commentary is going to be very important to watch out for in terms of store addition as well as the demand that they're seeing in tier 2 and 3 cities along with metros when the numbers do come out. But Shrishti, all eyes also going to be on Hero Moto tomorrow.
Well, yes, indeed. Hero Moto Corp this time around, if we look at the volume figure, yes, of course, there has been a decline of 11% on a YOY basis. But in the numbers, the key to watch out will be the margin number, because 14% is what we are penciling in. And if we look at the number and compare it on a sequential as well as on a YOY basis, that's not that bad as well, because 14% near to that level only is what the company reported same quarter last year, and this is coming despite the fact that the EV contribution has shot up within the portfolio. On the flip side, the domestic volume has also seen some bit of a pressure, but it's the premium product for Hero Moto Corp that is doing pretty well and giving some bit of a push to the margin, and along with that there has been a hike in the average selling price as well. But all in all, a decent sell expected from Hero Moto Corp. The key to watch will be, of course, the margin profile, and along with that, what's the company roadmap to grow their EV segment going ahead, and how do they see the demand trend shaping up as we head near to that festive season as well. All these things will be the key to watch out for. But Anand, help us with your take on the auto pack right now, because a bit of an optimism building in when it comes to the festive season sales, and off late the so far, they haven't been that disappointing, especially the margin figure. What's your sense on the auto pack and any particular stock that you like at this point?
Well, auto has obviously many segments, and the part that we are seeing doing well is the part that's related to farms. So, for example, tractors have done reasonably well. Consequently, we've seen, Mahindras, etc., reporting good numbers. If you're looking at, the passenger vehicles, obviously nothing much to shout about. SUV is only market that is making any money. The lower end cars continue to struggle. Maruti has reported reasonable numbers, and exports may help it. But overall, I don't see any major surprises on the upside. CV is nothing great to talk about. So you are left with two-wheelers, which have reported decent numbers. Clearly, the growth has been quite good in the most recent figures that we have seen. Barring Bajaj, most of the companies did exceedingly well in the current year. And that is a little surprising to me because you've also had an increase in the share of EVs that is coming through in the two-wheeler segment. And despite that, the overall volume growth reported has been fairly aggressive. So that could be one area of surprise. Again, companies like TVS, who have now been performing consistently over a while, are still probably going to continue to do well. And therefore, while they are extremely expensive, may still offer a good place to hide compared to some companies like Bajaj, which have had much more erratic kind of output in terms of the earnings. So net, if you're looking at two-wheelers, I would argue that, TVS to some extent Hero. If you're looking at SUVs, passenger vehicles, it's clearly Mahindra, again, very expensive, but nonetheless showing consistent performance. And the tractor business, as I said, is something that can be held on to. Auto ancillary is obviously in the global context not doing very well, not likely to be doing very well in the near future as well.
Okay, so that's the take on autos and the spaces within autos that Anand is liking at this point. Anand, thanks so much for your time, and Sharon, thanks to you too for joining us on the show. With that, it's time to wind down for trade on today's in today's session, and let me hand it over to my colleague Ashesha, who's here with a roundup of all the market action we've seen today.
Well, yes, we did recover a tad bit in the last hour of trade, but despite that, we are ending with a cut on both the indices. We have Nifty that should come up for you on your screens. We're ending nearly 60 points lower for the day, near that 24,660 mark. Escorts Kubota in last hour of trade, remember, was rising nearly 0.9% in trade today. We also had Nifty Bank, which is ending nearly 250 points lower in trade, near that 55,380 mark. In terms of other individual stocks, we had Adani Ports. That one is ending nearly 2% lower for the day. We have Adani Enterprises and Reliance.
We have hit a technical glitch with Ashesha, so let's just take a look at what the markets have done in today's trading session. Nifty 50 lower by almost 0.3%. As of now, we're very mildly above the 24,000 mark, 24,600 mark, pardon me. So last couple of minutes, let's see if we're able to hold on over there. Sensex 0.3% lower. Rupee is inching its all-time low. It's very close to that. 87.8 is where we are at the rupee right now. So that seems to be slightly concerning. India VIX has cooled off a further 2.5%. So looking good there. Nifty Bank, however, continues to underperform the benchmarks over the course of the day today, and 0.4% cut is what we've seen on the Nifty Bank. Let's take a look at what the broader markets have done in today's trade, and Nifty Midcap also lower by 0.4%, so slight underperformance there, and the small cap index to 0.2% lower, absolutely in tandem with the benchmarks. Some stocks that have done well in today's trading session, Titan almost a 2% move. Numbers are out day after tomorrow for Q1, so watch out for Titan. You have IndusInd Bank on the back of that MD CEO news coming in. So IndusInd Bank up 2%, SBI Life, Maruti Suzuki, Coal India, Trent, they all continue to do well. Trent in focus ahead of its numbers tomorrow. On the flip side, pressure continues on the Nifty from Adani Ports, Reliance, Infosys, Adani Enterprises and ICICI Bank. The advance decline ratio has skewed slightly more towards the declines today, and that's why that's the kind of pressure we are seeing on the broader end of the market as well. Sectorally, good moves coming in from select sectors, while it's been a mixed move over here as well. You have Nifty Auto and Metal that have managed to close in the green, but other than that, weakness in pharma, realty, IT, banks, PSU banks and energy. So that's how we are shutting shop for the day, and let's just pull up the Nifty one last time and see where we have settled for the day, and you will have the Nifty very soon on the screen. Nifty 50 at 24,649. We've just missed that 24,650 mark by a hair, but not much to worry about, because tomorrow all eyes are going to be on the MPC outcome and how the market reacts to that. But from Shrishti and me and the team that put the show together, thanks so much for tuning in.